All right, guys, we're going to give it about 2 more minutes to give some people a chance to get logged on. I hope everyone is doing great today. I know I am. And we're going to get the training started in just one moment. Don't want to take up too much of you guys. It's Saturday. Thank you so much for hopping on to get the information to learn how to get started with your trading. All right, guys, so we're going to go ahead and get started. And if you have a pen and notepad, great. You want to take some notes. I'm just going to kind of go over some information for new members. It's good for current members as well. And I'm going to start to share my screen. Okay, so this is our beginner's training for iMarkets Live. It's a slideshow. Oh no, what happened to my slideshow? Hold on, guys. I have this. Okay, I got it back up. Guess it didn't like that I just had it sitting there, but that's okay. Okay, so our new beginners training, here are some slides. So we're going to go over what's Forex, which pairs you should trade and when, the difference between buying and selling, understanding what a pip is, money management, how to place a trade, and Forex strategies and analysis along with trading sessions. And I actually took down some notes myself. And I'm going to actually step outside because my family is getting loud. So give me 1 second, guys, to go outside. Okay, perfect. All right. So in the Forex market, this explains what Forex is. Forex is essentially the buying and selling of currency. What's traded? So GBP versus USD. So that's the Great British Pound versus the US dollar. Now we even have it where we can trade the movement of cryptocurrency. So Ripple, Bitcoin, Ethereum, so many other things like that. Here are the major currency pairs. Well, major currencies. Now, what I do a lot is I'll take screenshots when training is going on just so I can have something to reference. So if you guys want to do that, you absolutely can. That's just something I personally do. But on the left, you see the symbol. Next to that, you see the country, what country that symbol represents. Then you'll see the currency and the nickname. So sometimes you may be, I know in the beginning I was on IML TV and I would hear someone say Aussie. I'm like, what? But I had to go back and study because especially seasoned traders, they know this language. So they might not always say AUD or the Australian dollar. So we have to make sure that we have ourselves well versed. So when it comes to the training, we're quick to understand and absorb that information. So the next slide we have here are the currency pairs. So three currency pairs that are good for beginners are Euro USD, USD JPY, and USD CHF. Okay, those are the three that have been recommended by one of our master swipe traders, Wealthy Pips. So as beginners, focus on those three. Get to know your pairs. Get inside of your demo account. But we're gonna go over all of them. Euro USD, USD JPY, GBP USD, USD CHF, USD CAD, AUD USD, and NZD USD. Okay. Now, what is a pip? The best way I understood this, besides looking at the technical definition that is given, I looked at a pip as a point. Okay. And I can tell the market how many points I want that pip to be. Now, if you're doing Japanese, JPY, it's only three numbers after the decimal point. That third one is the pipette. So I always cross that one off. I'll put it back on later, but I cross it off just to add. And then anything else besides JPY is going to be that fourth one. So what is a pip? A pip is the price interest point percentage in points. The unit of measurement to express the change in value between two currencies. One pip is the smallest price change that an exchange rate can make. Exchange can make. Got to see. That's okay though. You guys get it. And pips are based on lot sizes on generic global value sizes. So again, the best way that I understood it to break it down into just regular words and not all this technical stuff, a pip is a point. So if I want to say, if I'm in a Euro USD trade and I'm going for a sell, that means I'm saying that Euro is weakening and the US dollar is going to strengthen against that. I'm going to tell the market, I want you to enter me at this point. When it goes down 20 pips or 20 points, go ahead and take me out. And I can tell the market how much money I want each 20 of those points to be. So, trading lots, lot sizes. And this is very important because in Forex, 0.01 does not mean 1 cent. It means that in the regular world, but not in the language of the wealthy. 0.01 means 10 cents. Okay? And you have to know that because in the beginning, I used to wonder why in the heck was I learning so many lessons, because I don't like to call them losses. Why was I learning so many expensive lessons? Because I wasn't paying attention to my lot size. In a Forex market, again, it's not language like everyday banking. So these lot sizes are very, very, very important. So I'm going to start over, well, on the left it says lot size, standard, mini, micro. Next to that, number of units, 100,000, 10,000, 1,000. But the size, that's what you really, really have to pay attention to. So let's start from the bottom with the first example that I gave, 0.01. In the regular world, people may think that's 1 cent. Oh no, honey, not in the Forex world. That means 10 cents per pip or per point. And that's important. The next one, 0.10. In the regular world, that's 10 cents, but not in the Forex world. That's $1. So for every point the market moves, you're saying, I want to make $1 for every point. And then the one at the top that looks like $1, that's a standard. That's $10 per pip. So I would highly recommend, highly recommend screenshotting this because it is very important. Because if the market just so happens to go against your analysis, you have to be willing to eat that lesson. And you don't want to think you're putting in $1 and then you just set up and put in 10 and potentially blow your account. So this is very, very important, guys. The next one, how to place a trade. My 5-year-old is learning how to do this as well, okay? And I have an Apple and an Android, so I now know how to put these trades in on different devices, but it's very, very important. You're going to have 2 types of orders when you're trading Forex. You're going to have instant, which can also look like market execution. And that's when you're telling the market, okay, I'm going straight in right now, buy or sell. That's instant. I'm instantly in a trade. Or you have pending orders. So you have a buy limit, a buy stop, a sell limit, or a sell stop. So let's examine what those mean because it's very, very important. A buy limit means, and that's a pending order, the purchase is at or below a specific price. So that just means if we're putting in a buy limit, let's say the market, oh, I wish I had something to visually tell you guys. So I'm not going to give that example because I don't want to confuse anybody. So we're just going to go off of this right now. And next week, I'll make sure for this, I have something for you visually. A buy stop, a pending order at market price. A sell limit, a pending order to purchase at or above the specific price. And a sell limit, a pending order below the market price. So your stop losses and take profits are very, 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 very important. So a stop loss is essentially you telling the market, you know what? This trade went in the wrong way. This is all the money I'm willing to risk. Take me out of the market. I'm done. I don't want to bleed no more. I done learned enough of my lesson. Take profit is where you're telling the system, okay, this going in the right direction. But you know what? I met my 10 to 12% goal for the day. I'm not going to be greedy. Go ahead and take me out and let my profits stop right there. Okay, so take profit. So in this graph, you'll see right here where it says entry level. That's the middle line. That's where you're telling the market, when price reaches this point, go ahead and activate my trade. Put me in the market. And take profit is showing when the market gets up here, I want to collect my money. And then the stop loss is, hey, this trade's not going the way I wanted it to go. Go ahead and pull me out. This is all I'm willing to risk, which is 1 to 3% of the total balance of my broker account. Okay, support and resistance. This is very, 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 like, so many very important, guys. You have to look left to get right in the Forex market. So your support is a point on the graph that continues to test and fails to break through. Okay, so support. When we walk on the floor, that's our support. So I correlate support with the word floor because our floor supports us. We walk on that. The sidewalk supports us. That's what we walk on. Resistance is a point on the graph that continues to test and fails to break through. So resistance is a ceiling. If you're standing in your living room or your bathroom or whatever room, you cannot physically bust through that. You just cannot. So resistance is a ceiling and support is your floor that you walk on. And it's 3 types of trading analysis. You have technical analysis. That's where you study the price movement and patterns of trading. Fundamental analysis, and these are people that study the news. They analyze a lot of economic and political standpoints. Like, for example, whenever Donald Trump opens his mouth, that's a good opportunity to make some money off of the US dollar, whatever it's going against, okay? These are some of the things that can impact it. Unemployment rates, interest rates, so on and so forth, okay? And there's actually a website called forexfactory.com. Brianna Lyons Harris does a wonderful job of showing how to set that up for high impact news. You have red folders, yellow folders, orange folders, and bank holidays. And that's something we can dig into a little bit later in regards to fundamental analysis. And then we have sentiment analysis. That's a combination of analysts with the usage of trading strategies and anticipation of market flow. There are 3 types of trading strategies. We have swing traders, which our CEO, Christopher Terry, he sends out those swing trade alerts. We can now get on Sunday nights when he goes live for swing trades and things like that, where he analyzes the market. It's a mid-level trading strategy, and it can last for a week to 2 weeks. God bless those people. I right now, I don't have the patience to be in a trade like that, but there's some people who do, okay? It can, I already told you, it can last a week or 2 weeks. Few trades, but lucrative over time. So if anybody is kind of doing Dr. Spiller's savings account strategy, it's kind of, in my opinion, swing trades, because you're entering and exiting off of the daily chart. And it can go for days and days and days until those MAs cross over. But I don't want to get too deep into that because this is for beginners. Then we have scalping. Now, to me, this is for thrill seekers because Lord have mercy. You in and out that joint quick, 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 quick. That's like on a 5 minute chart, the 15-minute chart, the 1 minute chart. So scalpers, they day trade, quick trades moving in and out of the market, strict exit and entry points using small price changes. And then we have position trading. These are long-term trading, months to a year, large capitals, usage of fundamental analysis. So remember on the last slide, we talked about fundamentals. A position trader is basically analyzing the market on a fundamental analyst perspective. Now, this is very, very important, guys. Trading session. Now, we don't want you to think, okay, it's not the Tokyo session, so I can't trade anything, Tokyo or Asia. I can't trade JPY. I can't trade AUD. I can't trade NZB. That's not what we're saying. However, what we do want to point out, all of us want to put ourselves in a position for the highest probability for profit. And when you look at it from that standpoint, how can I put myself in a position for the highest probability for profit? You begin to understand which pairs are going to move and flow better during which session. So there are actually 4 sessions, but these are condensed. So we have the London session, which is from 3 a.m. to 12 p.m. Eastern Standard Time. Then we have the New York session, which is from 8 a.m. to 5 p.m. Eastern Standard Time. And the Tokyo session, which is from 7 p.m. to 4 a.m. Eastern Standard Time. You're going to find the most liquidity when the London session and the New York session overlap. What do I mean by overlap? It means they're running at the same time. So based upon this right here, they overlap from 8 a.m. Eastern Standard Time, the beginning of the New York session, to 12 p.m. Eastern Standard Time, the ending of the London session. Now, I'm not saying that to say you won't make money any other time in the market because that would be an untrue statement. However, what I am saying, you have a higher probability of catching some pips and the market really, really moving because those economies are both up and active at the same time. So money is moving. Would you rather be in the market when people are up and they're making purchases and they're doing this and they're doing that and they have the economy moving? Or would you rather be in the market when people sleep and ain't nothing going on? Nobody's out there shopping. Nobody's out there on the internet doing anything. If they in the bed sleep. So let's put ourselves in the best position to make money in the market when it's moving and it's active. So this is intermediate training right here. And basically, it's kind of going over things that are a little bit more advanced. How to set up your trading account, your demo account, your chart setup, platform familiarity, placing a trade, swipe trade app, and harmonic scanner review. Okay? So this slide right here, and we are not recommending any brokers. IML is simply an educational platform. You use any broker you so choose. This slide is for example purposes only. Okay? This shows you how to set up a demo account. And really, what I used to do is I would just Google the brokers. And if you Google them, they will come up and you can set up live and demo accounts. You want to write down your username and password to set up in your MetaTrader 4, which we'll go over together as well. This is just another slide continuing on showing you how to set it up for this particular broker. You can put MT4 on your desktop. And speaking of desktop, one thing that I've been hearing Lee Allen say a lot since Christopher Terry has started on his Night Owl is to invest in 2 screens for your trading. Okay. I just thought about that, so I shared that. Kind of off topic, but that's all right. This just continues on to show you how to set it up. You want to enter your login and password. And I write this stuff down too, because if you're trying to test out different brokers and different strategies, everybody does not trade crypto. And they give you your login and password, so you're not going to remember that. Get someplace inside of your trading book, where you take your notes and stuff like that. Write down the name of the broker, your login, and your password, so you don't forget that stuff. If you want to, okay, this is how it pops up when you initially get it. This right here is showing you how to change the time frame. So H1 means you're on a 1 hour chart. Each one of those candles was activity for 1 hour. Then you have H4. Each one of those candles was activity for 4 hours. So on and so forth in this example. Then there are three types of charts. Really, there's more than that, but these are the basic ones. And I've added Hikanashi, but you can do whatever you so choose. You have the, oops, I didn't mean to do that, y'all. Sorry. You have the bar chart, candle chart, and line chart. And one thing that I started to do months ago was when I'm drawing up my analysis, I'll start with the line chart, because the line takes out all of those wicks and stuff. I can see it. And then once I've finished building my analysis, I'll turn it back to candlestick. Trading directions and trends. Well, trends and directions. Guys, this is real simple. The market is going to do three things. Okay? It's going to go up, it's going to go down, or it's going to go sideways. You'll hear a lot of people call sideways indecision, consolidation. It's just going back and forth. It's kind of like a tennis match. It's just the market is going back and forth, back and forth, back and forth. You do not want to trade the market when it is going back and forth, back and forth, back and forth, because you'll pull your hair out. So the market is going to be going up, as you guys see right there, uptrend. You want to trade the market when it looks like you can climb the stairs, and Dr. Spiller gives this example. I'm going to climb the stairs. So that uptrend, I'm going up the stairs. That downtrend, I'm going down the stairs. Okay? And then it'll also show you like bullish reversal patterns, bearish reversal patterns. But again, it's two types of trends, up or down. That's it. Don't overcome. You can't overcomplicate that, up or down. Then you have two candle directions. Bulls are up, and Coach Ray gives a good example of how to remember this. Chicago Bulls, they play basketball. They got to shoot the ball up into the hoop. Then the Chicago Bears, they trying to get a touchdown. So more than the ball is on the ground. Okay, so Bulls are up and Bears are down. And even think about a literal bull. Their horns are going up. A bear, he's going down in his little thing to hibernate. He's going down collecting his food and stuff like that. That's how I remember it. All right. Now, platforms. You have your navigator window, your market watch, terminal, trading chart, and new orders. Now, I have to be 100% honest. I am always on the go, and I trade 99.9% from my cell phone. I do, because that's what's convenient for my life. However, drawing up my chart on my cell phone is not convenient for my life. So I use the MP4 on both of my laptops at home to draw my charts, but I'm execute my trades off of my cell phone. And I made a commitment to really digging in and learning how to execute off of my desktop, because I'm gonna be honest, I do not feel comfortable, and if I had to, I wouldn't be able to, and that's just my truth. But that don't mean I don't know how to trade. I know how to put it in on my cell phone. So the point is, I would highly recommend learning how to do both. You never know what might happen to your cell phone, and you never know what might happen to your desktop. So learn how to do both. So placing a trade, you're going to click new order. And to me, essentially, it kind of still looks the same on your cell phone or the same functionality, but you're entering your stop loss. You're underneath type right there. I'm sorry. Let me start over. Stop loss is to the left. You're entering that. You're going to enter your take profit. What type of order is it? Remember, it's two types of orders, market execution or pending order. There are two types that fall under market execution or instant order, buy or sell, period. There are four that fall underneath your pending. Buy limit, buy stop, sell limit, sell stop. Okay? So you're showing the system what to do. Then you're going to tell the market, when it gets to this price point, put me up in there. Then you're going to hit place, and it's going to place the order for you. Okay? Now, your swipe trade app. Swipe trade is a beast, okay? Now, some people prefer to only do trades from certain um, masters, and that's fine, whatever. The point is, learn how to utilize it. So the first thing you have to do is download the app. Then, how you log in. Sorry for the noise, guys. That's the car passing by. You log in with your IML username and password. Now, you have the option to accept or decline a trade. I never decline a trade, ever, ever, ever. And I don't decline it because there's someone who knows a little bit more than I do because they're on the platform being able to call trades. That's first of all. Now, just because I never decline it doesn't mean I always place it. You don't have to place every trade that comes through on this app. And I had to learn that lesson. Okay? So you're going to download it, log in with your IML username and password. You can click accept or decline. I'm just telling you, I never decline them. Okay? Oh, and another reason I never decline them is because once you decline it, you can never go back. You can't get it back. Okay? So it gives you an option to review the trade. It's so awesome because the swipe masters, they show you what they see and how they drew up the chart. That's that first page. And it also shows you the pair, what time frame they're calling it from, what type of trade is it? Is it a new trade idea? Are they updating you on the progress of it? That it lets you know that. It also lets you know where they recommend you should enter. You guys see on here there are two entry points. You can choose whichever one you want to enter in. And then that one under there is a lot size. It looks like this is kind of condensed. They'll give recommendations on the lot size too, and you'll have notes at the bottom. And then it'll go over the take profit. Yeah, it kind of, they were trying to put it on the same page. That's okay. We can work through this. So in that left example, you see where it says entry price 2 and trade update. Let's go to the right over here where it says 0.05. And remember, we learned in the first cluster, that's not 5 cents. That's 50 cents a trade. Okay? And it says 3% risk per $1,000 in your account balance. It shows you where the master is recommending you take your stop loss. Tell the market to say, hey, this went the wrong way. I'm good. Stop it. Or we have take profit 1 and take profit 2. I always enter take profit 1 on any trade that's called. Anyone, whether it's this, Harmonic Scanner, Dr. Spiller, whomever. Okay? Questions and answers. Does anybody have any questions thus far? Sorry, I didn't mean to slide that, guys. Now, I can't see the chat, so if you have questions, please unmute yourself. Because I'm not leaving off this page because last time it got messed up. Okay, so I'm going to take that as no questions. Harmonic Scanner. Quinn, blessed me so scandalous with a conversation we had. It might have been a month or two ago. I don't know. But we were talking. This is why it's important for you to talk to your leaders, because you will learn things that you never thought about. But I had started learning about Hikanashi candles, and Quinn made a recommendation to put the Hikanashi candles on the harmonic scanner, and I can put the moving averages on there. And now the harmonic scanner is already good by itself. Let's just get that straight. However, when I added those two, I have been able to demo trades that are getting me 50 and 100 pips per trade. Okay. So right here, now this is the desktop version. I do not use the desktop version. I'm being open and transparent. Desktop is not my friend, but pray for me. We're going to work on it. So this is going to show you support and resistance, long weeks, consolidation, the trend line, price moving in a direction, retest, and pullback. Those are your entry confirmations. So when you're looking on a harmonic scanner, you can make a sound decision on whether you want to enter the trade or not. We have confirmation checklist, and a Daisy goes over this. So does Christopher Derrick. And if I'm not mistaken, this is actually a slide from Christopher Derrick's training. And I know that because I am in IML Academy. We all need to be in IML Academy, learning. Treat this as if you were in college. Like, how committed would you be to learning this stuff? And that's the way I look at it. So on this slide right here for confirmation checklist, you see up there where they have resistance. Remember I said resistance is like your ceiling, support is like your floor. You have to identify your support and resistance, find multiple areas where price have touched, wait for the price to break support or resistance areas, and wait for price to retest. Breaks and retests are very important, and I'll be very honest. I've been in IML almost 2 years, and a light bulb just went off about break and retest. I don't care that it took that long. The point is, I got it. Breaks and retests are so important. But the more you practice it, the more comfortable you will be with it. Drawing trend lines. We all hear the phrase, the trend is your friend. So let's just take a look at this middle one where it's going up. If you see the trend line going up, don't enter a sale. Don't do that. That's not a good idea. The trend is going up. You want to look for break and retest for continuations to the upside for your point of entry to go ahead and get into the trade. So a trend line is a line on a graph showing a statistical trend. These are like facts. It's happened in the past. These are statistics that we want to go by. Remember, live by the saying, look left to get right. Okay? Then you draw price reversal zones. So price reversal zones, I kind of call them like T levels. You know, where did the market get to, get exhausted and stop and say, oh, I'm going the other way? That's a price reversal zone. It went to a certain point, stopped, and it went the other way. This is just another example. Christopher Derrick is absolutely a beast when it comes to this. Forex chick Melissa is a beast when it comes to this. So those are definitely some channels that you want to tune into to learn that. Identifying pullback. So what is a pullback? A pullback is essentially, and this is in Tiffanee terms. So let's say it's an uptrend. The prices is going up, it's going up, it's going up. Then, ooh, wait a minute. It kind of do a little pulling back, going back down. It's not a trend reversal. It's kind of like a break. Oh, I've been going up so long, I'm a little bit tired. Let me catch my breath. I might have to take a couple steps back. That don't mean I'm going back down. I might just take a couple steps back. That's a pullback, and then it continues to the upside. That's the best way I can explain it in Tiffany time. Okay. Then here's another checklist. So the key area has support and resistance. You've been able to draw a trend line. It's a price reversal zone, and it had a little pullback. So this is the end of the slide, and I wanted to show you guys something else also before we get off. Where is my Telegram group? Not mine, ours. Universal Trade House Legacy Mastermind. So this is from my what phone is this? Android. It's gonna be is you access it different from an iPhone. But if you click on the picture, you can go to shared media, guys. Anything that's ever been shared in our group is in here. I am a visual learner, and I wish I was at home so I could show y'all my living room. Like, there's so much stuff on my wall, like by my desk about trading. I'm a visual person, and this is wonderful for me because you can literally go back through here. It's blurry now, but like if you click on it, like for example, I have this on my wall. You can save that and send it to an email and print it off. But anything that we've ever shared, like Quinn, she just looks out for us so tough, y'all. Look at all this stuff she put in here. Like, come on. And you can print this stuff off. And these things are correlating with our new members training, guys. It really, I know I'm flipping through here fast, but it's because you can, the point is you can go in there and print this stuff off and look at it. Files, Fibonacci trading. We have PDFs and things like that. It's going to take a little second to load here, so bear with me. Okay, you can pick. I'm not going to do that because I'm still learning how to use this phone. So the point is you can go in here and look at all of this stuff. This is outside of what we get in iMarkets Live and IML Academy, IML TV, and stuff like that. Links to different things on YouTube. And any person that's left something voice activated. So that's something that you want to go to in there, and also use the pin post. Robert and Quinn have given us so many resources, guys. So many. So you want to go back through here. This shows you how to set up your broker account and things like that. Another thing Quinn touched upon on our last one is IML Universe has been revamped. Please go through it again. So many new tools and resources. And another one last thing I want to show you guys, because I appreciate your time. Don't want to hold you too much on a Saturday. Ours is the one with the globe on it. So you can search this for anything. So for example, people who want to know about IML swords. Anything that has been attached to our group is right there. So how I did it was, okay, we got to Legacy Wealth Builders. There's a search icon up there, and you can type in whatever you want. So let's say you want more training on harmonic scanner. So you might want to spell it right first, Tiffany. Click search, and everything comes up. Okay. So that is all that I have for this week. I'm gonna stop sharing. Thank you guys so much for getting on. In the recording. in our you on our YouTube channel. It'll be there by Monday. No, it'll be there by tonight. I have no need to wait until Monday to do it. It'll be there by tonight. If you guys have any questions, please reach out to your plugged in upline, or please reach out to Robert and Quinn. I appreciate you guys' time, and have an awesome and amazing Saturday, guys. Bye bye.